Greetings everyone, Joseph James here once again from theschooloftrade.com with your term of the day and quiz. Today was December 1st, 2009. And guys, if you're unfamiliar with how our quizzes work, here's how it all works. At the end of this video, there's going to be a short quiz. Right now, I'll bet you guys didn't know about taking tests for trading, but of course, there'll be a quiz at the end of this video. Now, all you have to do is click the link below this video in the description to post your answer to our blog. The first 5 correct answers every day will receive a free beginner's course, which is a $50 value. Each correct answer will also earn you credit towards your advanced course membership. So a great way to save on your advanced course and a great way to get some free course materials just for answering the question of the day. For more information about this, guys, drop us an email. That's sales@schooloftrade.com for more information. Now let's talk about the term of the day today is range charts. Now, of course, we had a couple of questions about this in the webinar we did this afternoon, as well as our live trade room this morning. So, of course, we'll talk about range charts. What are range charts? Well, before we talk about range charts, let's look at the different types of charts we can use. Now, we use Ninja Charts here in our live trade room, and of course, Ninja Charts, as well as most other charting packages, will allow you to use all different types of charts. Whether it be time, volume, ticks, range, there are all kinds of different charts these days. These are the basic 4, though. Of course, you have your time charts, this being a 1 minute per bar, right? A time-based chart means that there's a specific time per candlestick. When it comes to volume charts, there's a specific amount of volume per candlestick. And of course, you've got tick charts, right? Specific amount of ticks or trades per bar. And then, of course, you've got your range charts, which, of course, specify the trading range per bar. So you've got a 1 minute chart for a time chart. You've got a 1,000 volume chart for a volume chart, right? Maybe 1,000 trades per bar and a tick chart. And of course, what we're talking about here today is our range charts, which we use here in our live trade room, which of course uses a specific trading range per candlestick or per bar that's formed. Now let's compare a little bit between the two, and we'll look at what are the major differences between a time chart and a range chart. Well, I'll zoom in for you guys here. Now, here on the left side, here's your time and volume charts. Now, as you can see, guys, we have different sizes for each candlestick, right? See how some candlesticks are maybe 5 ticks of range, while some may be as big as, over here, right? Maybe as big as, 12 or 15 ticks of range. Some may be as small here as 5 or 6 ticks, and some may be as large as 20 or 30 ticks, right? It's based on time and volume. So each candlestick may have a different size or a different range to them. And as you can see, right, it makes the chart look a whole lot sloppier. The patterns don't look as nice. But now compare this over to the right side here, right, to your range charts, and you can see here when we zoom in, right, every single bar is the same size, right? For a 4 range chart, every single bar is 4 range, right? 4 ticks of range. So you can see how a range chart, things will look a lot more organized, right? In my opinion, it's much easier to look at price patterns on a range chart than it is on a time, a volume, or a tick chart, because you're not going to have the same size of the candlesticks, which means, of course, you're going to see much more sloppy charts. So, range charts are pretty simple. A new price bar every time the price has moved a specific range, right? Pretty simple. For example, a 4 range chart means that each candlestick has 4 ticks of range. Now, some of the benefits are it's easier to see the patterns. It looks cleaner, right? Not as sloppy as a 1 minute chart, right? A 1 minute chart might have, these small condensed candlesticks all the way across, right? A sideways market. Well, a sideways market, you're really going to see how slow that market is with range charts. There's less sideways trading and no new bars without additional trading range. So if you look at a very slow day with a 1 minute chart, you're going to see this very sideways, right, tight trading range here as the market kind of chops along. But with range charts, it's not going to make that sideways range. It's simply going to sit there until the price creates a higher range. And of course, as a day trader, we don't make any money when the market goes sideways. I make money when the market goes up or goes down. So as you can imagine, range charts help to filter out all the temptation that comes along with trading in sideways markets, because it's only going to show a moving market when the market's actually moving. Unlike a tick chart, which of course will start to speed up as the market trades more often, right? As the volume increases, so do volume charts and tick charts. We don't necessarily care about that though. Okay, because if the volume is going completely sideways, right, I don't care about that. I want to know if the range is increasing up or down. That will help me identify when the market is really moving according to my rules. It's a lot easier also to manage risk. Now, if you can imagine, we place our stops above or below a candlestick. So knowing what the exact range is per candlestick, that of course is going to help us identify and manage the risk per trade a whole lot easier, because I know every single candlestick is the same amount of trading range. So they're cleaner, they look much better, easier to see the patterns, and of course less sideways chop and slop that you see on things like time bars. Alright guys, quiz time. Quiz time. Get out your pad and paper, guys. Now range charts, they specify that a new candlestick forms based on what? Now A is time, B is today's trading range times 10%, C is the number of ticks of range, and D is the average true range of the market you're trading. So range charts, they specify that a new candlestick forms when what happens, right? Based on what? Is it based on time, based upon today's trading range times 10%, the number of ticks of range in that candlestick, or the average true range, the ATR, of the market you're trading? Now again guys, right, here's how it works. If you know the answer to this question, right below this video you'll see a link. Click on that link that says I know the answer and get a free copy of the beginner's course. You'll also earn credits towards your advanced course, and of course more information about that, drop us an email at sales@schooloftrade.com. Remember to post your answers by clicking the link below this video, and you'll post the answer on our blog. And we'll see you guys tomorrow morning at 7:45 Eastern Time when we open up our live trade room. Don't forget, we'll offer you guys a free 3-week trial, and for more information about that, drop us an email at sales@schooloftrade.com. My name is Joseph James. Hope you guys learned about range charts today. We'll see you guys tomorrow morning live trade room, 7:45. Don't miss a tick. Bye-bye for now.